Welcome to today's episode. And with me today, I have Chris Peterson. Welcome, Chris.
Hey, Tom. How are you?
Doing well. Thank you. And thank you for joining us again.
Thanks for having me.
Yeah. A few episodes ago, you were a guest on this podcast, and we had a lot of good comments, good reviews on it. And so I thought, hey, let's do it again and learn some more about self-storage. So maybe first, before we get started, could you just share just a bit about your background so that we can, so our listeners can understand who they're listening to and why you are the expert in self-storage?
Yeah. Hey, Tom, first of all, thanks for having me on. And I really appreciate this and count it a privilege to actually be asked to come out and share my heart a little bit and share some of my experience. 20-year investor from the Midwest, single family dwellings, rental properties, some commercial, so a few smaller Maltese, things of this nature. And just out there grinding away as the typical entrepreneur. I count it as a blessing. Real estate has changed my life. Count it as a blessing. From there, I was given the opportunity. My wife and I, we moved to Florida several years ago, and I met up with Robert Kiyosaki and his team, and they offered me a position. And so I became one of their trainers and one of their mentors on staff with them. And then I worked for them for a few years and decided to come off the road. And then I was given another opportunity from some of the celebrities on HGTV to actually go out and present and train some of their products. During that time, I actually met Scott Myers, who is the owner of Self Storage Investing. And when my wife and I looked at his presentation and we saw the business model and we were experiencing a lot of the same things that many entrepreneurs who are trying to hold real estate for cash flow. When we saw this business model, things just really started to click with my wife and I, and we started to kind of reevaluate what this looks like. And so I kept in contact with Scott. Scott reached out to me and asked me if I would want to come on board with my experience in real estate and see if I could help individuals move through this process of how to actually acquire self-storage investing, but also participate in like our mastermind group and things like this, where there's a lot of syndication, a lot of networking, a lot of help. We make more money in real estate than we do actually selling coaching and training, but we have had to train a lot of people in order for them to be able to do it. And so I get to live this world as an entrepreneur, but I also just as somebody just trying to help people dodge a lot of the pitfalls that are out there.
Yeah, that's great. You've had a lot of experience in real estate, experience in training. I know that, what was it, about 3-4 weeks ago, I had the opportunity to come and speak at one of Scott's and your mastermind events. That was a great event. A lot of information, a lot of knowledge at that event.
Yeah, what we've been able to do is, the ultimate business model for us is we kind of classify it. We have like an investor side, and then we basically have a student side. And so our mastermind group is, put together of people who are, number one, they are either storage facility owners, or some of these individuals may have been extremely high professionals. They've done okay in their careers. They're sitting on money. They're looking for placement on the passive side, or maybe they've come through like the commercial Maltese, and they just understand this business model. And so the goal is, even for our students, we want our students to go through the process and become facility owners, so we can ultimately, as a company, network with them and partner. When you're looking at these storage facilities, oftentimes it's a big number. They're expensive.
Yeah.
They can, and so people are going to need help economically. They're going to need some partnering. They could need just an actual partner in this experience, whatever it may be. And we try to put those together through our network. The last mastermind that you attended, we had 9 deals that were presented at that, worth $27.75 million out of those 9 deals for investors to actually participate in. So it's a great club that we've established and put together.
Well, and what I really liked about it, what struck me was the fact that you have investors that are looking to be passive investors with a reasonably good amount of money in those couple of rooms that you had. And you also had the people who wanted to be more active who are looking for money partners, where it really set the stage for people to work together. And so I could see how that mastermind could be really powerful in bringing people together to create deals from that event and from that mastermind group. So I mean, it was a great model.
Yeah. So we have 2 masterminds. We have what I would call like the A player. These individuals are indeed facility owners, or as I said, just extremely high professionals who are sitting on a lot of liquidity and just get this business environment. Now, they typically just want to participate passively and invest in other people's deals. They like this strategy. They're comfortable with it. They get significant returns, and so they're placing it there. And then we have the other group. We have a mastermind for them. They need the structuring, a student of what a mastermind can bring together. You present a deal. You have a body of entrepreneurs and investors that understand this business, and they're actually helping that person. Have you considered this? Have you looked at the environmentals? Where are you at in your feasibility study? And or whatever the case may be. How is this actually structured for other investors? So they need that, but yet that group still needs some more instructional training. And so we offer that for those individuals as well. And then we bring these 2 groups together. We want both groups to actually know who they are, because the top group wants to actually help the others. They're going to need them at some point in time. And the other group needs the top players because they need their wisdom, their experience, their expertise. And so we've been able to merge these together, and it's been a hit. It's working very well, and it's been good feedback.
So let's back up for a minute, though. What is the main reason, or what are some key reasons that you or our listeners would consider self-storage over some of the other? There are a lot of real estate investment strategies out there. And I mean, I have my reasons why I like self-storage, but maybe you can share some of your reasons or what the advantages of self-storage can be.
Well, the biggest is, and I have to be careful how I say this, but there is a lot of data to support this. They're almost recession-proof. So when we're looking at cycles in single-family dwellings, apartment buildings, obviously they're cycling up and down. But if you're in a top cycle where the housing market, like what we're seeing now, is performing very well, and a lot of rentals and things like the home prices are selling very well, people are acquiring stuff. And we know that 1 out of 10 households or families will have 1 or more storage facility. So they need a place when the economy is doing well, people are acquiring more stuff, but they don't get rid of stuff. They don't get rid of their older items. They'll place it in storage. And then as the markets turn, and they're going to, and we start to see a downtrend, life happens, bad things happen to good people, and sometimes individuals will be foreclosed on, or they're just over leveraged, or whatever it may be, and they need to go from a house to an apartment. Something tragic happened in their life, but they have things, and so they're going to need to actually place their belongings into this. And so from a market standpoint, these perform very well, whether it's an up market, a down market. We're seeing the data and the occupancy rates are very sustainable, and we're not seeing big fluctuations. And so from an investing standpoint, this becomes a very safe place. We see about $1.12 per square foot, where an apartment is about $1.02. And so we know that these perform well, and we're not dealing with tenants. We're not dealing with toilets. And so we're able to avoid a lot of the contractors. We're not going in and remodeling. If somebody doesn't pay, self-storage is protected through lien laws versus eviction laws. So we can simply just put a padlock. And if they don't pay, we can hold an auction.
So what I'm hearing is there's a lot of simplicity, a lot more simplicity in self-storage. And that really is I would say one of the key reasons that I really like it is the fact that it has a lot less moving parts, so to speak, than a rental unit or apartments or single family homes or certainly fix and flip or new construction. It's as simple, I mean, maybe not quite but it's practically as simple as, like you said, put a lock on the door, and they're either going to come back and pay the past rent, or they're not. And
that's correct.
Either way, you have a solution. So.
And from an operating standpoint, I meant obviously the smaller facilities. Oftentimes, we're finding that those are being owner operated. So a mom and pop, they bought that. They're cash flowing very well and are functioning those. But what we've been able to help individuals was, although a facility may not be big enough to support staff, having somebody actually fill out the leases, we can put a kiosk and they can simply walk up and touch a screen and they can fill out the application. It tells them what unit they go to. They swipe their card. It gives them a lock and they're able to actually go to their facility. They code in so that it's secure. They can get in and out of the gate. And so we can take a smaller facility so we can still function as a passive investor when we're actually operating this. And that's a huge attraction for a lot of individuals, is because we want to start moving over more towards that passive lifestyle. We don't want to be dealing with just opening doors all the time and letting people in.
Yeah, at the event, there were two strategies within the self-storage strategy that I really I liked, and I thought that had some real good opportunity. One was expansion of a current facility. So a lot of times these facilities get put in areas, in commercial areas, where there is room for expansion, and so that was an interesting situation, especially on one of the projects that your investors were presenting. The other is the ability to take warehouses or commercial buildings that are, and maybe you can share the types of buildings that have been converted. It just, that to me would seem to be one of the, maybe some of the lower hanging fruit in creating new facilities, is by way of repurposing commercial buildings.
Absolutely. So to address your first question, obviously when you're acquiring a self-storage, I mean, the mentality is for us as an investor is we're looking at it as a business. Mm-hmm. The real estate itself isn't necessarily holding a lot of value. There is value in that, but each one of those doors determines how well that actual self-storage business is functioning. So we're structuring, some of this is very structured, like with the multis and the commercial, as far as evaluation. When we look at a facility, we're always looking at value adding. So whether it's most of these facilities nowadays, they're offering an insurance. In order for you to place your stuff in there, you need to buy the insurance. Whether it's adding U-Hauls, whether it's selling boxes, expansion. You buy a facility that's sitting on a 2-acre worth of space, but when you acquired the facility, you actually had 3.5 acres. So that creates RV storage in the short term, while you're possibly converting over to add more doors in the back of that to fill that up. And so we're always looking at value adding. And so whenever we approach that is one of the critical elements. But as you were talking about, your second point is the conversion is huge right now. Toys R Us, a lot of Kmart's, a lot of these industrial buildings, for whatever reason, they're sitting vacant. So companies go out of business. And so we're seeing these big box stores that are sitting empty. The older, smaller Walmarts are sitting empty. We're able to go in, many investors, they're acquiring those, and they are turning those buildings into self-storage. They're climate control. People want their stuff not only protected, but they want to make sure that it's safeguarded through different climate changes and moisture and things of this. And so there's been a huge push towards actually even moving towards conversion, because obviously the building is in place, the actual structuring is in place, the parking is in place, the interest is in place. Now it's just a matter of actually converting the inside of that and adding doors and putting up metal walls. And it's huge business.
And I can imagine that one of the challenges when a building is repurposed is neighboring properties not being in favor of it because of whatever the type of repurposing might be. In the case of self-storage, I can't imagine that there would be opposition in general to that, because it is.
Yeah, we're putting cameras up. Mm-hmm. The entire facilities are fenced off. Mm-hmm. And so these are very secure. There's not a lot of traffic. It's not like people are going to their facilities. Some individuals may have a Saturday flea market and they're storing their stuff and opening the gates and allowing people to come, and and that's another value added that you can determine if you want your facility to do that. Probably some of the biggest pushback, I would say, if there's a pushback, is sometimes when you're looking at a conversion or putting in a new facility, is just getting some of the codes put in place. Because what happens is if you say, well, I'm going to take up this much space, a city on taxation purposes would say, well, if that was a business that employed 50 people versus a storage facility that may only have one, they're looking at it from an economic, but we're always able to actually jump those hurdles because we're coming in with such buying power that they understand this, that we're able to actually maneuver through and get those cities on board because of all the benefits that we're bringing. Very safe facilities.
And so let's go down this path. Let's assume there are some listeners that have buildings in their area that they think could work well. Maybe they have a lot of cash. Maybe they don't have a lot of cash. Maybe they have other resources other than money. Maybe they have teams or different things. What's your advice to people who have some of the resources but not everything?
Contact me directly, and we can get them in contact with somebody on our team, and we'll take a look at that. Because once again, as entrepreneurs, we make more money investing ourselves. And so when we see a spot or a facility, we're going to take a hard look at that. We're going to consider the car count and everything that comes into place to make a decision whether or not. But we also know that they're going to need some help. Whether or not they're going to need help coaching and going through and understanding how to do this, convert it, maybe build it, expand it, value add it. We have property manage it, whether you're going to have people there. Is it going to be owner occupied or owner operated or a kiosk or what that looks like? We're going to help you determine based on the size what that area is going to have in place. But it also creates opportunity for many investors to actually get on board. And then the exit strategy is we want to value add this, but oftentimes we're taking a C or a B, turning it into an A, and then that looks very powerful for the REITs and the big boys and the guys. They want to buy one that is just fully operational. They don't have to touch. That's a great exit strategy for us. We're going to cash flow along the way, but we're very mindful. One of the huge benefits to doing this is we're doing this in stages. So we don't have to build an entire facility out. We can build a few units, stabilize that, add units, stabilize it, and continue to actually move through this in phases versus trying to just build up the whole place all at once and then hoping however long that time frame would be to shorten that cycle to get it occupied. Yeah. And so, just reaching out to us.
You and I have talked about this a lot too, about the value and the power of collaboration, of working together, of creating teams, and being able to leverage off of each other's strengths. And just a quick little shameless pitch here. I have a book that I have coming out very shortly called Mastery. It's called Mastering Real Estate, Private Money. See if I can say that. Matter of fact, just for the listeners here, Chris's wife has offered to read through it before it gets printed. And Chris, you said that she is a master at redlining or
red pen.
Red pen.
Yes. So correction. Live with that.
I'm hoping, I sent the message with it this morning. I'm hoping that it comes back with a lot of red, because I'd rather see that now than if it gets to Amazon and there's all kinds of comments on it. So thank you. Tell her thank you very much for that.
Absolutely. Yeah.
But in the book, I talk a lot about collaboration, about creating a team. And with a team like that, being willing to share the upside, but with that, you're sharing so much of the downside risk. I mean, you're mitigating or reducing the potential of downside risk, because you're teaming up with other people who have the experience, who have the tools that it takes to get a project done on time and on budget. So
and one thing that we often say with our company is, if you want to go fast, go by yourself. If you want to go far, go with a team. Mm-hmm. And so we have the right people in place, and it's not our investors are not out to take somebody else's deal. That's just not how we function. Because we know that there's so much participation in syndication that we can be involved in, that it's not a dog eat dog world out there, that I'm going to do whatever I can to actually make sure everything comes to me. We have more of an actual sharing, and we want all of our investors to be performing at a very high level. And so it's just coming from a different mindset and what the actual overall exit strategy is for your listeners and for us as investors, to how to participate.
And so for our listeners, what would you say is their next step? If they have questions, I know you said they can connect with you. What would that look like for them to connect with you?
They can contact me, send me an email. It's simple. It's chris@selfstorageinvesting.com.
CHRIS
at selfstorageinvesting.com.
Mm-hmm.
Shoot me an email. I can schedule time, and I offer anybody 30 minutes. I'll give you a 30-minute call, and we can discuss your situation and help you determine what bucket you belong in.
It's like a mini mentoring session.
It is, and that's because we want to make sure that we're positioning people. We know where the fulfillment goes, but it's a matter of making sure that we're positioning what their actual strategy is and how we can best serve them to get them to be facility owners or passive investing with others, or whatever that may be. Second, they can certainly go, and I encourage everybody, go to our website, selfstorageinvesting.com. A lot of information there, a lot of resources that just really kind of whet the appetite. And now I challenge everybody, and when you're in your daily commutes and you're about your business, have an awareness. Realize now just how many facilities that you're driving by, and then also start looking for these big box stores that you're seeing sitting empty, because they are still some of the actual lowest to acquire buildings that are out there. They're literally getting them for pennies on the dollar. Versus, the housing market is still, it's up. And so it's even tough to get great buys on those. But those big box stores, they're just sitting there and they're literally just giving them away. And then we also, one thing I wanted to share with your listeners, we look at opportunity zones. The government has come in, they've required every state to identify opportunity zones. And these opportunity zones are just areas, some of them may be more challenged or a troubled area. Oftentimes they're not. They may have just been developed or whatever in suburbs. These are great areas for us going in to actually look at doing a facility in that area or acquiring in that area, because the way the tax laws are put in place for these opportunity zones, it's a huge benefit for you and I as investor to actually locate that. And so we're moving in that direction as well and encouraging a lot of our entrepreneurs to do that. So.
Okay. Let's take a real quick sidestep here, and I don't want to put you on the spot, but if I was to ask you resources that you've used in the past, books you've read, things that have been helpful for you, not necessarily just in self-storage or not even necessarily in real estate, what are some things that have had impact on you, whether it's a book or other resources, anything, what comes to mind on that?
Well, I guess I get to plug your book because I read your book.
Before that, what else beside the book?
A book I'm currently reading, I'm just about through with it, is actually Lead Your Tribe, Love Your Work. It's by Piyush Patel. He's from the actual Silicon Valley area, and he comes from a different business background. It's been very important understanding. The book is based on how to actually incorporate and understand the different areas. Every single person within your organization has value, but oftentimes as business individuals, we always see ourselves at the top, and the little guy kind of gets left out, but the little guy needs a voice. And so it's a matter of how we can actually incorporate and become more of a tribe, more of a community. It's a great book. It's a great read. Obviously, I'm a huge Robert Kiyosaki fan. His books have changed my life. If they hadn't have come along when they did, those were some of the books that actually made me actually do self-evaluation to say I wanted to actually go out and do this, and I can do this. It changed my mindset. And so I'm constantly working my mindset, making sure I'm staying centered.
One of the things that I learned not so long ago about you was that you started out that early on. You were in the ministry.
I was. I grew up in the church. I come from a Christian family. I make no apologies about it. I'm not here to actually promote my faith, but obviously I'm pretty centered in that as well.
And where I'm going with that is that, so one of the challenges, I'll be totally upfront here, one of my challenges that I've had over the past, and something that you've helped me on, was the ability to get up in front of a crowd and share my message, or be able to speak in front of even a small crowd. At one point in my life, I was not able to do that at all. Now I'm to the point where I'm still quite nervous when I do it, but in the way that you present things and the way that you share things, there's what I notice is there's a real connection. There's a sincerity. There's I guess my question is, for people who want to get, call it more centered, and to be able to, live that life of, I'm not sure exactly how to describe it, but that connection and the ability to connect with people. Were there resources that you worked with to get that, whether it was one-on-one, but in this case, even more so in front of a group, something that allowed you to share with the audience because it's them that you're sharing with, rather than feeling nervous or anxious yourself?
Yeah, for me, and I ended up in the ministry accidentally. It wasn't where I really ever felt I was going to go. I ended up in ministry because I came from understanding finance and entrepreneur. And so I had the opportunity to go through a John Maxwell training and actually be trained by John Maxwell and help a church with some actual capital campaigns. I understood some finance. And so we were able to do that, and that opened some doors. And so when I first started speaking, I was just like you. I was just like a lot of individuals. And still today, public speaking is a little bit of a challenge for me. But I really just want to go up there whenever I'm sharing with anybody. I want to make sure that I'm just bringing value. And that my message is, if I was sitting there listening to any individual, is that message going to land on me? And is that message going to change my life? And of course, over the course of several years of speaking, as you're talking on different topics, it's really just a matter of having awareness and paying attention to the posturing of the people in the room, what they're responding to, what they're not responding to, and how can we actually engage with each individual in there. And I work very hard at that. And I want them to come away from that feeling like I created value in their life. And so,
yeah. And what I noticed was the connection, and really being coming from a place of wanting to give and being connected rather than from a sales or pitchy perspective. So
and once again, it kind of comes back to me with sales, and I make no apologies about being a salesman, by the way.
Mm-hmm.
We're all salesmen in some form or another. But if you would just simply just listen and ask some questions and not be so salesy, your buyers will tell you exactly what they want and what they need. I don't need to sell them. They're going to tell me what they need. And it's a matter of me being able to fulfill that and to be able to have the products in line that is going to actually solve that. And if we accomplish that, then that individual will come back and they're going to want our assistance in another project or whatever. And so I've always approached it that way. I don't want to just be standing up there, just sell. I don't want anybody to sell to me that way. I want to just create value and give them information. And if they can't buy for various reasons, some of it could be they just don't have the money or whatever, it's release with dignity. Give them value and understand that that's an individual out there, and something may just be going on in their life that they really want to do something. They're just not able to do it now. But if we just get away from me, you're dead to me, as like Mr. Wonderful would say on Shark Tank, then that's just not a good message that sits with me. I want that individual to know that even though you can't do this now, there are things that we can do to help you position yourself. And that's really what it's been for me. It's really been a mission for me. I want to do better economically and financially for me, my family, my legacy. But along the way, it's not about me. It's what can we do to actually impact somebody else along the way to actually change their life and their legacy. And that's where I come from.
That's it. Yes, I so agree with you on that.
Yeah.
If our listeners would like to learn more about you or about self-storage or about maybe even opportunities for Mastermind, whatever, could you share again how they might reach out to you and connect?
Yeah. Chris, CHRIS at selfstorageinvesting.com. Just shoot me an email, give me your contact info, and I can I'll send you an email with a direct number to me, or you can actually, go to our website. I encourage everybody to go to the website, selfstorageinvesting.com, peruse it, look it over. Once you see something in there that you like or have a question, reach out to me. I'll take the time and I'll do everything in my power to see to it that I am serving and supporting you with whatever it may be.
Great. Thank you. And one of the things I like to do on some of these episodes is give the person I'm interviewing the last word. So okay. I'm going to give you a chance to give the last word. If you were to, what, I'll let you have the last word.
Okay.
What do you have to share?
Well, number one, Tom is a friend of mine, and I count it a blessing and a privilege that he came into my life. And so he's been phenomenal in his giving and in his heart and of his wisdom and his background. But I think one of the best things that Tom can give to the listeners is his new book. And I it's not just plugging your book, Tom. When I read your book, I read this book as if it was a letter, and it was a letter written to me. And I found myself almost being able to just walk the path that you were walking. And that was why I highly encouraged my wife to read this book and actually assist you with this, because I found myself, you being so open and honest and transparent with some of the things that you've experienced, that you could tell that this was a book coming from a place of help. How can I serve and how can I support? These are the pitfalls. These are the areas. And so as I went through your book and I started reading it, I realized for me that I needed to get focus. I've done many different projects, but I can tell you not all of those projects have had great success. And a lot of that has been because I lost focus and I wasn't using my highest and best time in the areas on one or two projects, thinking I needed 10 out here. And so they were struggling. And when you were actually sharing some of the things that you experienced and you had a self-evaluation, at that moment, that forced me to do a self-evaluation. And I came to the same conclusion that you came to. It's time to get back to the basics, back to what we're doing best, and to stay in our lanes and go out there and actually do it. And so my last word is I would encourage each and every one of your viewers, get a copy of Tom's book, because it is a game changer for you as an investor, as an entrepreneur, but even just looking deep within yourself and understanding where you are and where you really want to go.
Wow. Thank you, Chris. That means a lot. Thank you very much. I appreciate that. So thank you, everybody, for listening. And until the next episode, happy and safe investing.
Bye, everyone.